What if I told you that a 3-digit number is quietly deciding whether you get your dream apartment, your car loan, your business funding, or whether you get rejected without a single explanation?
That number is your credit score, and most people don't even know what's inside it. Stay with me for the next few minutes, because by the end of this video, you're going to understand exactly what your credit score measures, what's dragging it down right now, and the fastest legal ways to push it higher.
Let me tell you about a guy called Marcus. Marcus is 27. He's got a stable job, money in his account, and no crazy debt. He walks into a bank, confident, ready to get a car loan. The banker smiles, types something into the computer, and then the smile disappears. "I'm sorry, sir. We can't approve this." Marcus is confused. He has money, he has a job. What went wrong? What went wrong was Marcus's credit score. He had one, just not a good one. And he had no idea why. If you've ever been Marcus, or you're scared of becoming Marcus, this video is for you. Because a credit score isn't magic, it's math. And once you understand the math, you can work it in your favor. Okay, so what actually is a credit score? Simply put, it's a number between 300 and 850 that tells lenders how likely you are to repay money you borrow. The higher your number, the more trustworthy you look. The lower it is, the riskier you seem, and the harder it is to get approved for anything. Now, the most common system is called the FICO score. Most banks and landlords use this exact model, and it's broken into 5 categories. 5 ingredients that go into your score. Here's the breakdown. 35%. Payment history. This is the biggest one. Do you pay your bills on time? Even one missed payment can ding your score significantly. 30%. Amounts owed. This is your credit utilization. How much of your available credit you're using. If you have a $10,000 limit and you've spent $9,000, that looks bad. 15%. Length of credit history. How long have you had credit? Older accounts? More trust. 10%. Credit mix. Do you have different types of credit? Credit cards, loans, mortgages? Variety is a good sign. 10%. New credit. Every time you apply for new credit, your score gets a small hit. Too many applications in a short time looks desperate. 5 ingredients. That's all it is. Now you know what goes in, let's talk about what the number means. If your score is below 580, that's considered poor. You're going to struggle to get approved for most things. And if you do get approved, you're paying high interest rates. That's how banks punish a low score. 580 to 669 is fair. Not great. You might get some approvals, but still with painful terms. 670 to 739 is good. This is where most people want to be as a starting point. Doors begin to open. 740 to 799 is very good. You're getting better rates, better terms, lenders compete for you. And 800 and above, that's elite territory. You get the best deals. You have maximum financial flexibility. So the question isn't just, do I have a score? It's, where do I sit? And how do I move up? Before we get into the actual fixes, I need to pause for just 10 seconds. If you've learned something in the last 4 minutes that nobody taught you in school, hit that like button right now.
Seriously. We're out here teaching financial basics that banks hope you never figure out. The least you can do is give us a thumbs up.
And if you're not subscribed yet, look, this channel drops videos that actually change how you think about money. Not fluff, not hype, real stuff. Hit subscribe so you don't miss a single one. Done? Good. Now, let's fix your credit score.
All right. The real reason you clicked. Let's go through the fastest, most effective moves you can make, starting today. Move number 1. Pay on time. Every single time. Remember, 35% of your score is payment history. This is the single most powerful lever you have. Set up automatic payments, even minimum payments. Just don't miss a due date. One missed payment stays on your report for 7 years. 7 years from one mistake. It's not worth it.
Move number 2. Destroy your utilization rate. Here's a secret most people don't know. You don't have to wait to pay off debt slowly. If you have a credit card that's maxed out at $5,000 and you get it down to $1,500, that alone could shoot your score up 30, 40, even 50 points in a single month. The ideal utilization ratio is under 30%. If you can get it under 10%, even better. Move number 3. Don't close old accounts. This one trips people up. You think, I've paid off this old card. Let me close it. Don't. Closing an old account reduces your total available credit, and it can shorten your credit history. Both of those hurt your score. Keep the card open, even if you never use it. Move number 4. Become an authorized user. If you have a family member or close friend with excellent credit, ask to be added as an authorized user on their card. You don't even need to use the card. Their good credit history can attach to your profile and boost your score almost immediately. This is one of the fastest legitimate tricks in the book. Move number 5. Dispute errors on your report. Studies show that roughly 1 in 5 credit reports contains an error. An account that isn't yours, a payment marked late that you actually paid. These errors drag your score down for no reason. You're legally entitled to check your credit report for free and to dispute anything that's wrong. Go to your country's official credit bureau, pull your report and read every line. Move number 6. Don't apply for new credit recklessly. Every time a lender does a hard inquiry, meaning they pull your credit to approve you, it slightly drops your score. It's small, usually about 5 points. But if you're applying to 5 credit cards in the same month, that signals desperation to lenders. Space out your applications. Now you might be wondering, okay, but how fast can I actually see results? Here's the honest answer. It depends on where you're starting. If your score is in the 500s, you can realistically reach the 600s within 3 to 6 months of consistent, focused action, paying on time, reducing utilization, disputing errors. If you're already in the 600s, getting to the 700s can take 6 to 12 months. The higher your score goes, the more patience it requires, because lenders need time to see a pattern of reliability, not just a few good months. But here's the thing most people miss. The fastest improvements always come from utilization and errors. Those are the 2 levers that can move your score the quickest, sometimes within 30 days of a billing cycle updating. It's not magic. It's not a scam. It's a system. And systems can be gamed, legally, if you understand the rules. Okay, real talk for a second. Right now, there is somebody in your life, a younger sibling, a cousin, a friend, who is about to make a financial mistake because nobody ever sat them down and explained credit scores. The kind of mistake that follows them for 7 years. Share this video with them. Not later. Right now. Open your messages, tap the share button, and send it. It takes 5 seconds, and it could genuinely change their financial life. And down in the comments, I want to hear from you. Drop your credit score range right now. Not the exact number if you don't want to. Just write 500s, 600s, 700s, and tell me, what's the one thing that's been holding your score back? Before we wrap up, let me bust a few myths that are costing people points. Myth number 1. Checking your own credit hurts your score. False. Checking your own credit is a soft inquiry. It has 0 effect on your score. Check it as often as you want. You should be checking it at least once a month. Myth number 2. You need to carry a credit card balance to build credit. False. You do not need to pay interest to build your score. Use your card, then pay it off in full every month. Myth number 3. Income affects your credit score. False. Your salary is not on your credit report. A millionaire with no credit history and a nurse with a perfect payment history have very different scores, and the nurse probably has the better one. Myth number 4. Credit repair companies can fix your score overnight. False. Legitimate credit repair is work you can do yourself for free. Any company promising miracle results in 30 days is likely a scam.
Remember Marcus, the guy the bank turned away? Here's what happened. Marcus went home, pulled his credit report, and found 2 things. An old phone bill marked unpaid that he'd actually cleared months ago, and a credit card sitting at 88% utilization. He disputed the error. He put $800 toward that credit card balance, and he set up automatic payments on every single bill. 6 months later, his score had jumped 71 points. He walked back into that same bank, same banker, same chair, and this time he drove home in his new car. That's the power of understanding the system.
Your credit score isn't a verdict. It's not a judgment of your worth as a person. It's a system built by banks, for banks. And once you understand the rules, you can play the game on your own terms. Pay on time, lower your utilization, don't close old accounts, fix errors, be strategic about new credit. That's it. That's the whole playbook. If this video helped you, I'd genuinely love for you to subscribe to this channel, because we're building a community of people who refuse to stay financially confused. And if you want to go deeper, our next video covers the exact steps to build credit from absolute zero. I'll see you in the next one. Take care of your money, because it'll take care of you.